Well, live from Austin, Texas at The Gathering, I'm Diego Sanchez, president of HousingWire, and I have the real honor and pleasure of talking with David Spector, chairman and CEO of PennyMac, for our Powerhouse podcast, which used to be my podcast, is now Zeb's podcast, but I guest host every once in a while, and I really love to do it, especially with somebody that I've spoken with before. David, thank you so much for joining me today.
Diego, thank you for having me here today. It's been a great day and I'm really enjoying myself. So thank you.
Yeah. So we just got off stage. I think we had a really lively conversation. And, you know, one of the things that we talked about was when I had you on Powerhouse about a year ago, you talked a lot about organic growth at PennyMac and about not really being interested in M&A because it might do something to the culture at PennyMac, which you're really passionate about. And then, 5 or 6 months later, you acquire Cenlar. What happened between our conversation and that acquisition in terms of your strategic thinking about M&A?
Well, so I think we're at an interesting point in our sector in the fact that there's a lot of consolidation taking place. And we are very committed to the organic build of our business. And so that's why we set out to build a subservicing business. But it became readily apparent to me that the decision to change subservicers is one that's a very long sales cycle, and to build a meaningful subservicing business was going to take years. And so when I looked at the subservicing landscape, I saw something really special and unique in Cenlar. And, I know the leaders of Cenlar. I have a little bit of history with those leaders. And I felt that this was an enterprise that obviously was the largest subservicer. So it would give us, immediate scale. And I felt that the scale was important because as we'll be talking about our servicing technology later on here, but the ability to get more scale in the servicing technology was a real driving factor for me. And I felt that, when I looked at the ability to acquire, to be able to board that servicing, that's a business we have a good long history with. When we started the company, we bought a lot of servicing packages, in particular non-performing loan packages. So we understand how to transfer servicing. And so the ability to board those loans onto our system, the ability to then deboard the loans when owners want to sell their servicing is something that we have a history with. And so it was a business that I feel very confident about. And so, it's not something that, and of course, the ability to get some efficiencies out of it is also helpful, but it's something that it was a really unique opportunity for us. And when presented, I thought, we're supposed to move forward with it.
So are you finding that those skills are transferable in terms of you have all this experience with onboarding, servicing loans that are being serviced, but is that transferable to mortgages that are being subserviced?
It is, because I think, when you're a subservicer, you have, in the case of Cenlar, they have 100 clients. These are large banks, community banks, independent mortgage banks, and many of these clients are clients of ours on the correspondent side. So number one, we also have great history in dealing with institutional clients. Mm-hmm. And so as a part of the transaction, there's confidence that those clients have in our ability to be able to serve their needs. Okay, and understanding who the customer is, what the customer's needs are. And we have a reputation in our sector of really working together with clients. So the transition of those clients is something that is first and foremost in my mind. And that transition will not start until the earliest 27. And so there, I think it's something that is really beneficial. And then the one area where we don't have the experience in is dealing with the uniqueness of those clients. Mm-hmm. And that's where Cenlar has invested a lot of time and capital to build out a team that knows how to service those clients for their subservicing needs, which are different than correspondent needs or servicing needs. And so it's something that I think is gonna come together really nicely for not only our clients, but for their customers. And that's something that I'm really excited about, is to just deliver a really great experience that I'm delivering to our own servicing customers today, to their customers.
It sounds like you're really focused on the strengths of their client support team.
Absolutely. Absolutely. And it's not just the client support team. There are, in mortgage banking, we have this issue where, you've got a generation of leaders who have spent the last 20 years fighting the fight of the great financial crisis. And as they move on, whether it's through retirement or to pursue other opportunities, we have need for just more human talent. And so, they have a lot of good leaders at Cenlar, and the ability to combine these two organizations is one that's going to be really exciting for me. And it's not, the great thing about servicing is, even with technology, you still need employees per, you need one employee per X amount of loans. And as we board more loans, many of the people we're going to need are going to come out of Cenlar. And so it's not going to be this big synergy transaction for us. Yes, there's synergies, but I think it's one that I'm really excited to see these two organizations come together as one.
So one of the sticking points with a lot of M&A, and the reason that deals fail, is folks can't integrate two different cultures. So knowing that going into this deal, what are you seeing in the Cenlar culture so far that has you excited, and what are you doing to prevent some of the cultural friction that can potentially come up in M&A?
Yeah, so my assessment of why deals fail, and I don't have any experience with deals, so
right.
We'll have to, just from an observation point of view, it takes place because the acquirer tries to mandate that the company they're acquiring take on the culture of the acquirer's company. And so, I spent a lot of time with David Schneider, the CEO of Cenlar, and Leslie Peeler, the chief operating officer of Cenlar. And, and I've known them for many years. I felt that we were very linked in terms of how we operate. And then meeting the leaders of those companies, I got very comfortable that this was, the cultures were going to be a really nice fit. So what really the work that I've had to do is with the PennyMac management team, is to help them understand that there's really good people over there who are going to think like them. And we just need to, as we think about transition and integration, we need to think of it, as we operate the company, of coming together, identifying issues, and really finding the logical solution. And that's really how we operate. And the key to PennyMac's success in many ways is, once we decide on a course of action, we move forward on the course of action. Okay, litigation time is over and we move forward. And that's something that also exists at Cenlar. And so, from what I'm hearing from both sides, is that the integration is going really well. And so I'm really excited about that. And
it sounds like you're pushing, really more your team at PennyMac to make sure that, the cultural integration is a two-way street.
Absolutely.
That you're not enforcing a culture one way.
Absolutely. And we should listen to everybody in terms of are there other ways to think about how you operate or solutions. We've got a great track record and we have tremendous confidence in history and how we operate, but that shouldn't stop us from what I often talk about internally of, relitigating key issues and asking if things change that would cause us to perhaps to operate differently. Do I expect there to be changes? Not a lot, but I do think, listening to leaders is something that's vitally important.
In the conversation before our onstage conversation, you talked about this new office that you opened in Dallas.
Yeah.
And I think it signifies more than just a new office in Dallas. You're thinking about, ways that you can bring two different parts of the company together. Can you talk a little bit more about that?
Yeah. So I'm really excited about what we're putting together in Carrollton which is a suburb of Dallas. But, first of all, we're a multi-office location. We're in Southern California, St. Louis, Dallas, and Tampa, Florida. Those are our main operational centers. And I think it's, from my perspective, when I looked at Dallas, we had servicing people in Fort Worth, we had production people in Plano, we had corporate people in Plano, and we were in a multi-tenant building in both. And I felt, for the company's sake, I wanted to be in one building, but more importantly, from my perspective, in mortgage banking, the production and servicing worlds are coming together closer and closer. When we buy servicing, or which we do every day in correspondent, and when we price servicing, part of the pricing component is what is the value of the customer, and what are our recapture opportunities going to be. And so when borrowers want to refinance, we want to be the lender who refinances those borrowers. Well, who's talking to those borrowers? Our servicing people. Okay, and they run a call center, and we run a call center in Consumer Direct, and getting those two call centers to integrate is something that is really important for me. And so being in the same building, the same location is vitally important. But I think building a culture and having that culture together in one building is vitally important. And so it's just something that's going to be very exciting for me to see. And likewise, Dallas is a hub of mortgage banking talent. And as you've seen consolidation take place in the industry, there's going to be mortgage banking talent that's going to be looking for other opportunities. And I want to be able to give them an opportunity at PennyMac.
So dominant in correspondent, a major player in wholesale, now dominant in subservicing with the acquisition of Cenlar. You talked about Consumer Direct. You've got a whole portfolio of things. You're operating across the entire mortgage landscape. How are you prioritizing across those different aspects of the ecosystem?
Yeah, so I'll tell you that, for all, whether it's servicing, subservicing, or the three production divisions, I don't prioritize. Okay, they're all vitally important to me. What is important to me across the enterprise is how we are investing in technology. In particular, how are we deploying AI into all of the company? And that's something that, I'm really excited to see taking place. We're seeing, it's being led in our Consumer Direct channel, where we're deploying some really exciting AI agents to help speed up the fulfillment process and do so at a lower cost to be able to close a loan in a shorter period of time. You can get a credit card in minutes. Now, you're not going to be able to get a mortgage in minutes, but we as an industry have to shorten the amount of time it takes to get a mortgage, especially a refinance, when the borrower gets benefit immediately. And so that's something that's really driving me in the organization. Furthermore, we have to reduce our costs in originating a mortgage. As consolidation has taken place in our industry, the amount of capacity we have in the industry is at a level that if rates were to decline 25 basis points, 37 basis points, there's enough capacity to meet demand. And what that means is margins are not going to expand as quickly as we've historically seen them expand. And so for us to continue to lead in the industry and to continue to deliver the return to our investors that we want to deliver to them, we have to focus on the cost to originate and the cost to produce. And that's why there's just such a hyper focus on AI and deploying AI. And there's a lot of, I don't care what part of the company you're in, there are opportunities to deploy AI to become more efficient. Now, that doesn't necessarily mean that we're looking to gut the organization, because, we have a lot of great people, a lot of great talent, and there's a lot of institutional knowledge and wisdom needed to run mortgage banking. But in terms of the blocking and tackling, we have to continue to address that to reduce our costs to originate and produce and to run the company.
Is there one tech team at the company, or is there a tech team that supports each of the divisions?
So we have one tech team that supports the infrastructure and the platform. In terms of what we're doing with building AI agents, we are moving more to, we initially had one central technology team, and now we're moving back to a structure that we had historically, where each of the groups will probably end up with their own team of AI talent to help them build the agents, to help them do the work to become more efficient.
And is that because each of those divisions has a very specific process that they need help with?
It's a great question, because you want to make sure you're getting the benefits and the insight into what the other groups are doing. Mm-hmm. But I think what's really important is I want to put the business leader in charge of building these agents. We demand our business leaders to be efficient and to look at running their businesses and deliver the returns that we want for them to deliver. And so I want them to really be the leaders in terms of driving for change and to driving for efficiency.
How are you, because that's really exciting, I think, as a business leader, but I think it can also be intimidating if you're asking folks to really develop expertise in AI. How are you helping them become the experts, or the at least proficient, that what they need to sort of like drive those kinds of business outcomes with AI?
So and I don't mean to be trite here, but the example I often give to people is, look, you all have masters of creating spreadsheets in your divisions. Can you create those spreadsheets? Probably not.
Right.
Okay. But you have that talent in your organization. So my job is really to make sure that our leaders have the talent to build to really build the AI agents and to deploy, AI technology into the business. Furthermore, we need to really make sure our business leaders in these organizations are working closely with the technology resources in those organizations. And it's what's really, I think, important is that you don't treat AI, as an industry, we think of tech in a big bang kind of way. We're going to do something big and we're going to deploy it. In the case of AI, just like in spreadsheets, it's about a series of sprints. It's about a series of, I need to build this and deploy it. It's build and deploy, build and deploy, build and deploy. Is it going to be perfect the first go around? I truly believe you'll think it's perfect, but trust me, you're going to change that over time. And that's how we need to think about it.
You seem like a leader who thinks a lot about growth, plans for growth, loves organic growth. How are you thinking about this next year and this sort of uncertain economic climate? And, if we were to talk again next year, next April, what would you want to have accomplished over the next 12 months?
Yeah, so it's a great question, which I get asked often. I think we have a really unique opportunity. One, we run a balanced business model. So, rates up 50 basis points, rates down 50 basis points. We're going to be profitable and we're going to succeed. From my perspective, regardless of where rates are, I want us to become more efficient. Mm-hmm. And so, driving that efficiency is something that is really, as we've been talking about here, is really front and center of my mind. I want to continue to see us lead in the market. I think in correspondent, we're a market leader. I think we've done a nice job building out a great business, but I think also we've done it by, pricing responsibly, behaving responsibly, and that's what leaders do. Mm-hmm. In the case of Broker Direct, I want to continue to be a leader in broker, and for, I don't really, quite frankly, have any bias to whether you delivered a number one or number two. I want to be a very strong alternative, and I want to continue to show you as a broker that there's other ways to work with lenders, and that's something we think of our brokers as partners, and we listen very closely to them, and so I would expect us to continue to expand our role in doing non-QM loans. We're a leading jumbo originator, and we're going to continue to grow that business. In the consumer direct channel, I really want to see us continue to, number one, grow our recapture of our servicing portfolio to be able to deliver lower rate loans to our existing customers. I want to grow our purchase business.
Yeah.
And that's something that we're focused on.
So do you think no matter what over the next year you are growing your servicing and subservicing book, or is that not the case?
It will grow. It will grow. I think because we have over $1 trillion of servicing, and when we started the company and we started in correspondent, we just wanted to build scale on the platform.
Mm-hmm.
And so I think in the case of correspondent, in this last quarter, we've seen on the conventional side, we've seen the GSEs very active as they're trying to meet their mandate to increase their portfolios to help keep that mortgage to treasury spread tight. And so as we're not buying as much correspondent loans, I try to tell the team it's okay. It's okay. And it's a very profitable business, and that business ebbs and flows. And we want to just be able to wait it out. The GSEs are not going to be active for eternity, and that's one of the advantages I think we get by having this big scaled servicing platform.
Well, David Spector, I know you don't do a lot of these conversations. You're really good at it. I'm so glad that you joined us today.
Well, thank you.
I love your insights. I hope we can do it again soon.
Well, the team at PennyMac prepped me for this. So,
yeah.
thank you very much. And thank you so much.
Thank you.